Hey everybody, welcome to the week ahead podcast for Equity Sense. You're on with Mike, and this is for the week of February 29th all the way to I think it's March 3rd, whichever one is Friday next week. We had a G20 over the weekend, and it actually yielded nothing. It was there was a pretty much a generic communique or communique, if you want, however you want to pronounce that word, and there was nothing that. Got people excited. I mean, we had a short covering rally. As some people were attributing that rally to the G20 meeting, expecting some sort of stimulus measures or some sort of policy coordination between G20 countries. But overall, nothing really happened. I think the biggest thing was that they're going to cooperate when they do some sort of FX policy. But if when nothing is set in stone or nothing is written, really can't trust anybody at this point. Um, so overall, in the coming week, we got the U.S. jobs number, which again, we'll see what happens. Kind of like the GDP on Friday. If it's good, most likely the S&P will probably sell off again. Um, the S&P or the markets really have a choice this week whether or not they will continue with the rally or the momentum upwards, or the hope is gone and we're gonna retrace lower levels again. So um, the good thing is at least you'll have a better sort of direction as we go into another month next week. There's nothing else notable as far as data or events are concerned. I mean, we got central banks meeting next month, but that's still quite a ways away. So the market will have to find another reason to rally or drop, whichever one. I think at this point, the bulls are desperately clinging on to any positive headlines that they want. And before you start saying or thinking, we're so negative here at Equity Sense, we're not trying to be negative. We're just stating what the facts are, right? I mean, the economy, as far as the U.S. economy is concerned, it looks good. So if you are going to go by that logic or by that sort of train of thought, then there shouldn't be any reason why the FOMC, the Federal Open Market Committee, should not continue its rate hike plan, right? That's if you really look at that. But if you are a desperate bull that you want continued rally, then you should probably start praying from today, starting today, that you want the data to be really bad so that central banks all around the world will come and rescue the markets. That's as sad as sounding as it is how the markets are at this point. So that's really what it is. I don't really care either way if we're gonna rally or not this week. I'm not Gavin, so I'm not gonna be like always angry that we're not crashing. If they decide to take it higher this week, then by all means, I mean, I'm ready to buy puts or I mean buy calls by Monday. But I just want to highlight what we think are the events for next week, and that's really it. Nothing else is kind of shaping up. So after having a 160 point rally, right, on the S&P 500, it really now the question now is, can it continue? Can the momentum continue, or will there be some sort of pullback for just to kind of test the resolve of the bulls, right? For those of you who love the Fibonacci retracement levels and whatnot, your 61% retracement is around the 1860, 1870 level. I'm talking about 1802 low and 1968 high, okay, on ES. I'm not talking about SPX. So that's a future. So if you're looking at a 61% retracement, if you're looking at a closer retracement, then we're looking at 1900 for your 38%, whichever one you prefer, like I said. So those of you who are Fibonacci fans will, undoubtedly love that. Um, overall, I think the easy trade is done. I think we've definitely overstepped or overshot the rally, right? If we were still 1880 from the rally from 1800, I'd probably think we still probably have some gas left in the tank. But we're kind of in between now, a rock and a hard place. Do we rally and hit that crucial 2000 support, or do we kind of pull back to 1900 or 1880? I mean, you also have to think of it this way, right? By that logic, if the US GDP was good on Monday or on Friday, I mean, and the S&P rallied, what more? Oh, sorry, the S&P dropped. what more if more US data comes to light next week and it's actually pretty good, then your rally is going to be in danger. So, and of course, by extension, if Janet Yellen and Mario Draghi and whomever is having a meeting next month in March sees the markets closer to their highs, or at least not too far from the highs, then again, you're back to the dilemma. Why would they give you stimulus measures when the markets are back, right? So in a way, I have to kind of laugh at this market every time it rallies or it drops because it's like oil, really. As oil price recovers, producers come back online, right? And then of course, thereby increases supply to the market again. It's literally like that right now. If you rally the S&P or the DAX or whatever it is that you trade, the big stock market indices of the world, then it literally removes the case for caution and sort of need for stimulus in the market, right? So you kind of have to think of it this way, right? If you want to be rescued, you got to play the part. You got to play the damsel in distress. The markets have to play the damsel in distress because if they look like they're a very independent person who don't need any help, well, who's gonna rescue them, right? So, anyways, that's sort of like our view of this week. I mean, we could be wrong. We're not always right anyway. So, but that's one view, and we'll see what happens this week. Good luck to all of you guys. And before I forget, so you can see it in front of you, got a class on Tuesday. There is a nighttime class too, so if you're interested, let us know. If you're not, yeah, it's cool. Have fun this week and stay profitable.